Today I would like to introduce you to the PAT Trading Simulator. I confidently predict this simulator will transform your trading in a matter of days. Let's jump right into it. First, open up a PAT chart. In this example, we're going to use a 15-minute chart. Starting the trading simulator is actioned by this icon here. You will then see the simulator window open. The first input box allows you to select a start date for your simulation. You have the option of typing a date, clicking the down arrow to enter a date from a calendar, and you also have a random date generator. This is very useful to ensure that you are starting your simulation without any prior warning of what the chart may look like. Next, you have the number of days input. This will be the number of days you want to simulate your trading over. The default here is set to 3 days. Next, you have the number of seconds you wait between each new bar being drawn. Now in real time, this would be the time of the respective chart, in this case 15 minutes. Of course, we don't want to wait for 15 minutes for training purposes, otherwise we would have to sit here all day. To start with, set this to 10 seconds. Just as a side note here, you can run this simulation in any time frame you wish, so if you want to train yourself how to trade on a longer time frame, then you can easily do that. The next input box is very important because your trading workday will depend on where you live in the world. The currency markets may trade 24 hours a day, but you cannot be at your screen that long even if you wanted to. Remember, this is about simulating trading in the real world, and should I say in your world, so to speak. The default time is set to GMT 9 AM, start through until 5:30 PM. If you live in the USA, you will simply adjust the start and stop time to the time you intend to be at the screen. Probably the easiest way to do this is to look at the PAT chart, left click on a bar that you know you would be at your screen to see, read the time from the yellow pop-up window, and then pop that bar time into the start time in the simulator window. Then do the same for the finish time. Next, we have the automatic stop loss you want to use when placing your simulated trades. This can be adjusted once you've actioned a trade, so just enter something here you're comfortable with. Likewise, you can enter take profits at a predetermined number of pips. Let's set this to 45 for now. Notice at the bottom left there is a button Show Old Simulations. Obviously only useful if you have previously run a simulation. I should mention here that there's no cheating. Once you start this simulation, all trades are recorded to a file with a full set of details and statistics so you can see how you're performing. We'll look at these later. When you're ready, click the Start button to start your trading simulation. The first thing you will notice is that the chart jumps to the date you have specified and starts to very quickly draw in bars. Certainly a lot faster than the 10 seconds you entered. The reason for this is that any time outside of your work hours that you have specified in your simulation is pointless for you to sit through. So PAT just speeds through this data and then starts to chart at 10 seconds a bar as you had specified. Likewise, when you reach the end of your working day, PAT will once again speed forward to the start of your next trading day. This speeding of through your non-working times is a great time saver and really allows you to focus on what will be your most productive trading time. Now would be a good time to press the pause button so we can explore this interface. The first thing to notice is that you now have a series of tabs along the top of the window. Clicking on any of these tabs will bring up the respective information. Let's go back to our main Orders tab. On here you can see that we now have a black information window. This shows the currency pair you are trading. It will tell you if you have an open position, that is a current open position, or no trading position, as it's showing here now. Under the currency pair, you will see the current price of the market at this present time in your simulation. These prices actually took place exactly as you see here in this window, i.e. this is real data. Finally, in this window, the last line gives information about the current state of the simulation along with the date and time. Below this area you will see the buy and sell buttons. These will be greyed out at any time you are unable to place a trade, for example outside of your working hours or inside an accumulation phase. As soon as you are able to trade, these buttons will become active so that you can then buy and sell. Okay, it's time to press the resume button and get this simulation underway. The first thing you will likely notice are the prices changing in the black window. Then, as 10 seconds pass in time, a new bar is drawn on the chart. which is reflective of the price changes you have observed in this time. It is important to note that during the normal 15-minute time frame, there would be many more price changes than you can see in the simulation window. If we tried to cram in 15 minutes of price changes into 10 seconds, the simulator would of course be a blur and completely useless. The bar you see on the chart is the exact bar made up of every tick. That is the important part. It is that which you are learning to read relative to the phase of the market. The simulator window shows us just the important prices we need to know, those being the high, low and some prices in between. Another benefit of this is that you'll come to realise that price is not really the issue when it comes to entering the market. The real value is knowledge of direction. Get the direction right and price simply takes care of itself. Okay, let's jump right into our first simulation. Here you can see we've got the start date all set up. We've got the duration of the simulation in days. This is set as 2 days. The reason I've done it only 2 days because we don't want the video to go on too long for uploading to the website. Incidentally, if you set this to 6 seconds, you will actually achieve a complete week's trading in about 1 hour. So that's a good guideline for you as well. I'm going to add this, take this up to 10 because we're doing a bit of a teaching exercise on this one and we want that to last a little bit longer. I'm going to set the trading time from 8 AM to 5:30 PM. I'd trade longer than that obviously and at different times here in New Zealand, but I'm just going to leave that just for the test. I'm putting an automatic stop loss of 20 and I'm leaving the default setting at 45 for the pips. Let's get this underway by just clicking start. Straight away we'll see that Pat will quickly zoom through the data that we would not be around to trade. And you can see during this time the buy and the sell is greyed out so we can't do anything. Then all of a sudden they become active. Now I'm now going to pause the market at this point because I want to have a quick look and see what situation we're in. We've got a couple of dots here. We've got a dot on resistance near here. We've got a good support, a good resistance line running through there. So I'm going to get the tool on there, the trade range finder tool on there, and just drop that on the top there. Okay, I can see that we've got a good sustained sort of down move from here. Let's just carry on a little bit longer and see what plays out from here. Let's just go a little bit more. Okay, I'm going to pause that now. I know the market's run back up into here. We've got an overall down move from here. Like I say, we've got down resistance, expecting the market to go on a significant day, and we're starting of a new day of the week. So what I'm going to do at this stage, I'm going to sell the market at that point. We can see now we got some extra information up here. We can see we're short, and there's the time on there, and you can see the price there, 62.27. And the simulation is paused. Now what I'm going to do is resume that and just watch what happens. Let's have a look. So we're out the money, even, out the money, out the money, out. Now I'm just going to pause that just for a moment there. You can see this red line here. Now what that tells us is that that red line is, you can see a little arrow at the bottom, little triangle, and that's showing us that that's the position where we actually, in this case, sold the market at, and the line is red going up because the market is moving against our position. That is, the market is going up even though we sold it. Had the market have gone down straight away, then that line would have been green. Okay, we can clearly see the resistance is quite effective as it goes. Okay, that's good. It started to come off, so now we're back into the green. So you can see with 6 pips, minus 2 pips, plus 1 pip, plus 5. Okay, again, don't get caught up on the numbers changing. We're looking at the overall effect that this move is having. You can see the line is going from red and then to green as the market goes, as the trade goes into the money. Going to pause this here and have a look at the exit and see what we've got on here, because it's the start of the day here. So I'm thinking we should really map this out. We've got a dollar resistance. I expect the market to go a significant distance. So I'm thinking we should be having a take profit in there by using our trade range finder tool. I'm going to zoom in so I can see the bottom price on the line, and I can see down here it is 61.53. So I'm going to put a stop in, an exit in that at say 3 pips above that, so 61.56. I'm going to click on there. I'm going to put that in at 61.56. Click OK. Okay, all looking good. Getting down towards where we want to be. You can see we're 41 pips in the money there. Incidentally, if you look at the prices to show the pips changing down here, you can see where our take profit is 39 pips lower than where the current market is. You can see that's constantly changing as the price is being updated. And our stop loss is currently 51 pips higher than where we actually entered the market. Sorry, 50. Yeah, stop loss is 51 pips higher than where the market currently is now. So what I'm going to do is I'm going to change that. So I'm going to click on change, and it instantly goes into a pause, so we can change that. And I'm going to have a look on there and have a look. So 62.41, we can see on this bar here. That would be a good place for a stop loss on there. So 62.41. It's now 2 hours and 40 minutes we've been in this trade. Now the reason why this is up here is because you need to be able to train your mind, as it were, into how long these trades actually take. We're doing a simulation process, but you may be in this trade, or you would have to be in this trade, currently 3 hours to be in this position that the current trade is showing. So it's getting you used to looking at the market at a longer term perspective and looking at where you get in the market and then where ultimately you want to get out of the market. So in other words, you're trading two targets, as it were. Okay, so things are getting down a little bit better now. We can see we've got that definite nice green line on our chart there, the green lines we want to achieve. And of course, if I wanted to close this trade at any point, I could just press the buy button, and that would then close this trade off. Tell you what, just as a matter of exercise, how about that we actually move the stop down a little bit more at this stage? Let's move that down. Let's take that off there, and let's move it down to 31. This is a good exercise to also show you how the market can go in and out of the money, and how you can get caught up just looking at price when really we're looking at an overall destination for this trade. And certainly one thing you don't want to be doing is using this tool to suddenly, when you see 40 pips, saying, oh well, I'll buy that now and close that off, and this is how I'll trade, because that wouldn't be trading in the real world just by taking the pips from this simulation window. Okay, then what's happened now is the market's gone inside accumulation. You can see it says here inside accumulation. Now at this point, the only choice we have is to actually close the market. Now I'm going to pause that a moment. Now when the market goes into accumulation, we can't actually take a simulated trade, but we can actually close the trade if we want to. Okay, so do we want to now close this trade and as it were, finish off this trade and take those 25 pips? I'm going to say no at this stage. I'm going to let the trade run on and to see how that pans out. Okay, this really is sort of dragging on a bit now, isn't it, when you think about it? The actual move, when you think about it, the accumulation is going on quite a bit on there. I think it would be worth actually taking those that trade at that point, closing that trade off, and we'll look again then when the market comes back out of here and see what happens. So let's close the trade there. You can see now we have no position. The buy and the sell is not available because the market is in accumulation. So let's resume. Okay. Fast forward, because these are times when we couldn't be around the trade. So in other words, Pat will just fast forward, write the data, and then take us right up to the beginning of our trading day. We're still inside accumulation at this time of day. At the start of our trading day, when we come to the screen, we can see we'd be in accumulation there. So that's why we can't buy or sell at this stage. Okay, I'm going to pause the market now, pause the simulation rather. You can see now we've got our buy and our sell available, our buy and sell buttons, so we can have a look there and see if we actually want to do anything at this point. So let's have a look at that. I'm going to go for a sell at this point here. I'm going to go sell because we've got this resistance on there. I'll tell you what I'm going to do. We're going to actually wait one more bar and see what happens. But I'm inclined at this stage to think that we could be selling because we've also got this resistance level set up there. And you can see how the market's probed back up into there. So let's just let's just resume that and have a look what happens after that. Okay, good job we didn't actually sell it at that point, that's for sure. I'm going to let that carry on a bit more and see what happens. We've actually got a 90 pips run overall now, right the way from, as you can see, from the low here, 61.78 up to 62.68. Okay, so we're now really coming down and probing back into the top of that resistance over here to the left there. Let's just go one more bar and have a look at that. Let's resume and just have a little look at the next bar, see what shows up for us there. I want to see really how the market's going to react away from where this dot is on resistance. Let's just have a look at one more bar on here and see what happens. I'm inclined to think now that would be a good buying opportunity. You know what, I can see that, so I'm going to pause that a second. I can see the market's putting a bit of volume, it's lifted up, it's come back down. Looks like it's fading to the downside now. So I'm going to put a buy in there, buy that, and if I anticipate the market's going to go up from here, I'm going to put a stop loss under here, and I'm going to put that under at 62.18. Let's go 62.18. Going to click OK. Got my stop under there. Take profit. Where am I going to take my profit? Well, if that is the start of the move today, I'm going to move that up to there, and my profit was 63.02. So let's go and put that in there. 63.02, So let's go 6,300. Click OK and resume. Let's see what happens. Okay, we've been in the trade now 44 minutes, 47 minutes, and still the market hasn't really broken up from here, so that's not a good sign. If that was going to hold and then bounce away from there, we'd expect that to sort of go quite quickly. Okay, it's broken through that now. Okay, we've been stopped out, so click OK. And I'm going to pause that so you can now see what's happened. You can now see that was our successful trade, the green and down there. I bought the market here, and because we got stopped out on this trade, Pat has drawn a red line in to signify that is where we've been stopped out. So let's reassess this situation now. Okay, let's give it a bit more. Let's resume the simulation and see what the next few bars deliver. See if they can give us some inside information into what's going on. What are the market makers up to today? What is going on? Where is that profit release? Are we going to get a profit release to the upside, or is the profit release going to go to the downside? In other words, is that the actual high of the market at this point here? And are we now getting into a down move? Okay, I'm just going to pause that a second here. I'll have a look at a couple of things. You see how we've got this increase? This is something that interests me. We've got this increase in volume. I'll move that up so you can see. See, we've got 3 increasing volume bars there. So the market started to pick up volume, and pick up volume, increased activity around this area of resistance. What's going to happen as a result of that? You know, if all that activity is actually going to move the market, which we expect it to do, which way is the market going to go from here? I'm going to go for a sell here because I think that I'll tell you what I'm going to do. I'm going to start one more bar, and but I'm sort of thinking to this stage we should be having a sell at this stage. Okay, so certainly not panning out as I actually thought on that. I thought that might be a reasonable sell at that position, but it was quite wise that I waited for that next bar. Okay, now the market's come back down a bit. You see we've got a little drop back over down there, so let's see what happens from there. Okay, I'm going to resume it now, and I'm going to have a look and see what happens on this next bar and see if we're going to get any sort of further down move. It's proving quite a difficult market to call this, but that's the whole idea of the simulation, to take you into these markets where you're unknown, you don't know what's going on, and you have to read the market forward. Okay, I'm quite interested in this now as a selling opportunity from here. I'm going to sell straight into sell at this point here and see what happens. Okay, now we're getting underway. So maybe I was just caught through that bit of manipulation a bit on there. So where would our exit be? Let's have a look down. 61.78, 79.80, 81. So let's go 61.81 as our exit on there. Take profit. 61.81. What I'm going to do now is speed this up a little bit to see if I can. But we've got 2 arrows over here. As you can see, we go faster here and slower on this simulation. So I'm going to click this and just push this on a little bit, because I wouldn't normally do this, but I want to do this so I can get this onto a video for you, so we can actually get it all up so you can see the whole simulation on the video. You can see we've speeded everything up quite a bit now. So let's try that again and speed it up again. 3 pips, there we go, and touch, take profit touch, position will be closed. Okay, going to click OK. You can see we're outside our trading hours, and we've reached the end of the simulation period. Okay, that's it. That's very, very quickly how to run through. We had a total of 3 trades. Looking at the summary, 3 trades. We've got a total of result of 79 pips. Average result per trade. There's all the statistics, the summary you can look down through here. Trades we actually took. There we go. We went to the entry time, the price, the exit, the time, etc. And then we go to transactions and have a look. And that was the settings that we actually did everything over. So there we go. That's a quick walkthrough of a simulation. Now you can fire up your own version and have a go yourself. Look forward to hearing from you soon.